Good morning, everyone, and welcome to today's Regional Economic Conditions webinar on agricultural conditions in the 9th District. My name is Carmiana Matson. I am the Assistant Vice President of Regional Outreach and Public Programs at the Federal Reserve Bank of Minneapolis. And before I turn it over to our speaker today, Joe Mahon, just a few housekeeping items. We will be emailing a copy of today's slides as well as a link to this video to all of our registered attendees next week. And Joe will have some time at the end of his presentation for questions. We'll be entertaining those questions via the chat box on Zoom. So you can type any questions that you have for Joe at any point during the webinar in the chat box, and he'll get to those at the end. And then at the end of the webinar, we would love to get your feedback on this webinar. So when you close out of Zoom, there's going to be a brief 3-question pop-up survey. We'd love for you to complete that. And with that, I'm going to turn it over to Joe.
Thank you, Carmi. As Carmi just mentioned, I'm going to be talking about agricultural conditions in the 9th District, but particularly I'm going to be presenting you with the results of our first quarter survey of agricultural credit conditions, which we just released last week. I'll describe that survey in a moment. If you've tuned into one of these webinars previously, the general flow of it might be pretty familiar to you. If you haven't before, welcome. Happy to have you join us. Before I go any further, I just want to make a quick reminder that I am sharing opinions only for myself and not necessarily for the Federal Reserve Bank of Minneapolis or the Federal Reserve System. Probably won't actually share too many opinions. Maybe when we get into the Q&A portion, people will ask for my my take on current conditions or something like that. I just want to kind of set a quick reminder that that those opinions are just mine and not necessarily those of the Feds. But mostly, I'm going to keep it to just an overview of the results of this survey, which we just conducted. So, a quick word on the survey. I'm just going to describe what the survey is real quick as a brief kind of level set. Again, for those of you who've joined one of these before, you might be familiar with the survey. Maybe you've even read the article, have a little bit of content that maybe wasn't in the article. A lot of it is going to be in the write-up. And there's some things in the write-up that I won't be covering today, but again, maybe time for Q&A. So then I'll get into the survey results. Quick, just sort of quick elevator speech version of the takeaways from the survey in case you can't stay until 9:30. Basically found another pretty good quarter in the first 3 months of 2022. Indicators of that farm income still coming in pretty strong, and land values really growing very strongly, and the outlook for the next 3 months pretty positive in spite of some concerns about input costs. I'll get into those in more detail in just a moment. So just a quick overview of the region that I'll be referring to. If you're not familiar with the Federal Reserve System, the country is divided up into 12 Federal Reserve districts. Our district that we cover in Minneapolis, and you see we have a branch in Helena, Montana as well, covers the states of Minnesota, North Dakota, South Dakota, Montana, Northwest Wisconsin, the Upper Peninsula of Michigan. For the purposes of this survey, we don't really include the Upper Peninsula of Michigan. There is some agriculture in the UP, but it's not terribly extensive, and we don't really have a lot of banks that specialize in agricultural lending there as a result. So really, just kind of those 5 states to the west is really what we'll be focusing on. And as you can tell, if you look at a map, if you're familiar with our part of the country, if you live here, agriculture is pretty important industry in our region, both historically and currently as well. And we're just getting into that time of year where farmers are really hoping to get their crops into the ground. And a lot of those crops are already in the ground. So I'll be kind of talking. This survey is kind of a read on where conditions are at the outset of the growing season. So just kind of a quick overview of the survey. It's not really, we call it a survey. It's not really a scientific survey. So we don't take a random sample of farmers around the region and poll them. This is actually a survey that we do of banks, mostly state Federal Reserve member banks. Some of them are larger banks, but they're all banks that have significant exposure or concentration in agriculture, that do a lot of agricultural lending to agricultural producers for operating machinery, real estate loans, and that have a large portion of their portfolio concentrated in agriculture. So don't think of this as being kind of a survey of farmers, but rather a survey of experts, as it were, who know the business very well. A A lot of their customers are farmers, and they have a pretty good sense for how their customers are performing and what the conditions are, especially in their areas where they're located. And so you can see that it's not a really large survey. For April, we got 54 responses from banks around the region, and again covering those kind of 5 states that I just overviewed. So that's kind of the way to think of it. Is and then we do it on a quarterly basis, so it's kind of a regular check-in with these folks to see the state of the industry. We do the survey quarterly, and we conduct it after the quarter has ended. So the results I'll be presenting to you right now are for the first quarter, that is January through March of this year. That's the period that we asked them about. The survey itself was actually conducted in April. Really the first few weeks of April is when we conducted the survey. And again, backward looking over the previous 3 months. And then we asked them for their expectations for the coming 3 months, the quarter that we're in right now. As I mentioned, we do this 4 times a year. This is a particularly good time to do it. Sort of this and the one that we do late in the year, the October survey, which comes at harvest time, that covers the third quarter. Those are kind of the sort of the biggest readings that we get of the state of the business. So it's kind of getting a view of agricultural conditions heading into planting in the busiest part of the growing season. And as I mentioned already, the reading that we got for this first quarter was pretty good. So I mentioned incomes rose. We also heard a lot of concerns, and I'll get into some of those later, about the increased cost of production, the costs of fuel, of fertilizer, chemicals, all just as the sort of inflation overall. Those are affected. That's affecting farmers as well. But what we can say so far is that it appears that crop and livestock and animal product prices are outpacing those input costs a bit, and that's leading to higher incomes overall. Along with those higher incomes, we've seen increases in capital spending, and then consumer spending by farm households. Those are things that we ask about on the survey. Other readings of financial condition, I'll break those down a little bit in a little bit more detail, but those are positive as well. So rates of loan repayment are up, loan demand is down. And then the outlook for the second quarter is positive, and I'll get into kind of some of the concerns there are about the kind of increasing costs of production. And then one of the biggest takeaways from this survey is we saw a really strong increase in farmland values and then cash rents paid to farmland owners for production. So I'll give you a breakdown of those as well. So just to kind of get into the breakdown of the survey, so we don't really ask for details about how much income has gone up. So we don't say what percentage change happened in income. We just ask for a directional change. So we ask these lenders, did income among your agricultural customers increase? Did it decrease, or was it unchanged? And the overwhelming majority for the first quarter reported that farm incomes increased, so 87%. And you can see in this table here, 70% reported that farm household spending increased, 68% reported that capital spending increased. Hardly anyone really responded that these decreased. Most of the balance were respondents who said that these held steady. And this is coming off of a couple pretty strong quarters. I'll show you some data for the kind of history of the survey in a moment. One quick note. You can see capital spending is up overall, or at least the majority of the respondents said the capital spending increased. We did get a few comments that to the effect that capital spending might have even come in stronger. It's just that it's actually pretty hard to find equipment right now. These supply chain issues that are affecting the rest of the economy are affecting the supply chain for agricultural inputs and for machinery and other agricultural equipment. And so a number of comments stipulating that capital spending might have come in stronger if there had been more capital available to purchase. So just kind of an interesting note on that. I'm going to put this in historical context a little bit. You can see here, this is just the history of responses from a quarter by quarter basis, indicating that farm income increased or was unchanged compared with a year ago. So just backing up the table I just showed you a minute ago, we asked them to make a comparison because, of course, agricultural income is heavily seasonal. We asked them to make a comparison not to the previous quarter, but to the same quarter a year ago. So the percentage, so those folks here are telling us that farm income increased. are saying that farm income increased in the first quarter of 2022 relative to the same period, the first quarter in 2021. So just a little bit more context I want you to keep in mind in showing you this chart here. You can see most recently, as you just saw in the previous chart, 98% of the lenders told us that farm incomes either increased or were unchanged. In fact, the majority of those told us that farm incomes increased. Only 2% said farm incomes decreased. So when you plot the survey results over time, you can see that we're back up now to the levels, the response rates that we were getting in the early part of the last decade, the really strong booming years in agriculture, where commodity prices were very strong and we were seeing very strong growth in farm income. We're back up to that level, at least in terms of the percentage of respondents telling us that farm incomes are growing. I'm not trying to say that we're going to get back up to the overall levels of farm income that we saw in that period, but the growth that we're seeing year over year is comparable. The other thing I'm going to point out, we're now at a point, so you can see there was this lengthy period where commodity prices were low, and farm incomes as a result were low, weren't growing as rapidly as well. We're now onto a period where the quarter that they're referencing when they're making growth, the first quarter of 2021, was itself a quarter where we'd seen really strong growth relative to a year before. So we're seeing strong growth on top of strong growth now, and that's noteworthy as well. It's one thing when you see one quarter where incomes come in high. We've now got a sustained more than a year period, really close to a year and a half, 2-year period of strong growth in farm income. So when we're making these comparisons to a relatively strong period already. So that's pretty good news. So that's the income picture. Of course, one source of information that's really valuable that these lenders have even more information about is the kind of financial condition of their borrowers and how they're servicing their debt loads. And what you can see here is that sort of consistent with strong growth in income. The demand for loans is down. 50% of respondents told us that loan demand decreased in the last quarter relative to a year earlier. 70% said the repayment rates on loans increased. So a very small portion said repayment rates went down. The majority said that they increased or were unchanged. About a fifth of respondents said that loan demand increased, but we got a few comments that this is sort of going into the beginning of the growing year is renewal season for a lot of our lenders. It's when they roll over a lot of the existing operating loans for producers. And the majority of them said that they didn't see any change in renewal activity. So there wasn't a demand to continue renewing existing loans. A little bit more than a quarter said that renewals decreased. Only 11% said that renewals increased. And again, a couple comments just saying it was sort of a mellow renewal season. Getting into the outlook indicators. So we ask, as I mentioned, what happened in the previous 3 months, and then we ask them what they expect to happen in the coming 3 months. So that second quarter of the year is another real crucial period for agriculture, the beginning of the growing season and getting into the summer months. Again, strong, pretty strong portion of the respondents in the survey told us that they expect farm incomes to increase further in the second quarter. And again, this is making a year over year comparison. So increases relative to the second quarter of 2021, which was itself a strong quarter. Only 7% said they expected a decrease. 59% said they expected increases in household spending, and about half said they expected increases in capital spending, again, with some of those caveats about whether or not there's going to be equipment and machinery storage available to purchase. And the turning to the financial indicators from these lenders, pretty steady picture, expecting a slight bump in loan demand over the summer. So just about 40% said that they expected loan demand to increase. Only a slightly smaller portion said they expect loan demand to increase. So on balance, kind of steady picture for loan demand. Again, strong outlook for repayment rates. 50% of the survey respondents expect repayment to go up, and very steady picture for renewals expected in the second quarter among these lenders. One other big story that's happened over the last few months, of course, is interest rates have been climbing. That's due in no small part to the Fed's monetary policy action in response to increased inflation. The Fed's begun tightening monetary policy. That affects, of course, our target interest rate, the federal funds rate, but then it acts on other interest rates as well. And you can see after bottoming out late last year, agricultural loans have seen increased interest rates as well. You can't see it that well in this chart. So we're just back up now in the first quarter of this year to the levels that we were at roughly in the second quarter of last year. As I mentioned, the agricultural lending rates kind of bottomed out in this quarter. So we saw, for example, a fixed rate on on operating loans increased to 4.7% from 4.6%. So these are relatively small rates of increase, but lenders kind of gave some indication that they expect these to continue going up again, given the interest rate environment. And it's worth pointing out, this survey was conducted in April, looking backward, as I mentioned, to the first quarter. The Fed actually, the Federal Open Market Committee actually did its first rate increase, its first tightening in late March, and its most recent happened well after this survey was conducted. So it's kind of not surprising that you'd see only a slight increase in agricultural loans. And some concerns, which we'll get into, about the cost of business, and that includes also the cost of borrowing reflected in interest rates. And then the big thing, one of the biggest results that jumps out at us from this survey in the first quarter is a really strong rate of increase in farmland, and you can see fairly consistent across the district. I'm gonna ask you to temper the number that we're getting for Montana. I'll explain that in a minute, but you can see the average price for an acre of non-irrigated farmland, what we call on the survey good quality farmland, in the district increased by 23%. Identical rate of increase on average in Minnesota and North Dakota, only slightly lower in South Dakota. So pretty consistent response across the core of our district. You see that really large rate of increase reflected in Montana, and you're going to see it even more in the next chart that I'm going to show you. But I do want to just kind of have you take that with a grain of salt. The number of responses that we got in Montana was relatively small. And for the purposes of making this comparison, we compare quarter over quarter to a year earlier, and we only compare the responses from lenders who responded in both periods. So to get a nice apples to apples comparison, we're only taking the responses from those who responded in the first quarter of 2021 and the first quarter of 2022. And that, when you pair out all of those extra respondents, we end up with a pretty small number in Montana. So this is really being weighed heavily by one respondent who saw a really phenomenal rate of increase in their area. And it's anyone's guess exactly what was going on there. Probably some land sales happening in that area that were really strong. And again, we hear a lot of anecdotes about the increasing cost of farmland in Montana, but I wouldn't read too much into this particular number as if that's sort of really reflective of the overall farmland market statewide. But again, across the region, you can see pretty strong growth. 23% year over year is pretty phenomenal rate of growth in farmland. And we see that reflected in rents as well. So rents, you can think of as being much more directly tied to the value of what can be produced on an acre. Again, I want you to take that Montana number with a heavy grain of salt. 140%. It's a pretty high rate of increase. But if you just look at those core, those central states in the district, Minnesota, South Dakota, and North Dakota, pretty similar to the overall district rate of increase, which was 17%. So on the same order of magnitude as the increase in land values, but slightly less. But this overall indicates an increase that's consistent with higher crop prices, higher value of what you can produce on an acre. And that's being reflected in higher cash rents that producers are having to pay to landowners if they want to produce on that acreage. So that was kind of one of the biggest results that jumped out of the survey. And then I'm going to end on a slightly, I've been giving you all this positive news, but I do want to end on a slightly, I'm not going to call it a pessimistic note, but just kind of a a slightly more moderate tenor, which is just to say we did get a lot of comments about the increasing cost of business, particularly the cost for fertilizer, for fuel, and you can see I pulled out some of these comments and put them up on this slide, so you can kind of get the general sense from what we're hearing. I think that first comment is really interesting. The lender suggests that with the current strong commodity prices, cash flows are working out. They're kind of overwhelming the increased cost of production. Again, that's why we're seeing an increase in income. But they're worried that if commodity prices kind of return to normal, that picture is going to invert. A much more succinct way of putting that, you can see right below that quote, somebody just said, inflation is way too high. And that's affecting farm producers as well as it's affecting households and everyone else in the economy. So I just kind of end with a quick note of concern about that. We did get a number of comments, but overall, very positive results to the survey. And with that, I'm going to take questions.
Great. If folks have questions for Joe, go ahead and type those in the chat box on Zoom. And Joe, there was a question that came in about that outlier in Montana. Do you have the ability to drop that off to see if then the land value increase is kind of consistent with the other states?
Yeah, I do have the ability to cut that out. I'm reluctant to do that. That's why I didn't do it in the official release of the results. In fact, in our actual release, our web release, we don't give the state-by-state breakdown because we like to just give the results for the district as a whole, because that's our whole sample. Once you get at a state-by-state level, the number of respondents is down, and that's of course subject to a lot of error. So if you then pair out even more respondents from a given state, then you're just down to one or two people, and that's. But I will say, just looking at a response by response basis, there was that one outlier in Montana. And then the folks that responded, they didn't do the year over year response, so we couldn't compare their responses from a year ago to get that average. Those were more in line with the results that we saw in the rest of the district. So the one year over year responded, and then the others who didn't respond in a quarter a year ago were pretty consistent with the other states as well. But still higher overall, I want to point out. So we do have some indications that land values are going up more in Montana. You can speculate as to why, whether it's rich folks from out of state buying up ranches. We do know that is happening, and that could be part of the story.
And actually, I was going to ask you about that, Joe, because we've heard anecdotally that is happening. So are we confident that this is truly farmland that is being farmed, or is this potentially just being purchased in a large home built on a lot of square footage?
So that's an interesting one, because we also saw that really big increase in the cash rent. And that's going to be, a lot of the land that people are pointing to, these kind of big land sales where billionaires or wealthy folks from out of state are buying up property in Montana. That's ranch property. That's going to be further west out in the mountains, people building lodges there. Of course, further east in Montana is one of the most productive, fertile wheat producing regions in the country. Wheat prices are really high as well, and so I do think some of this is tied to fundamentals. It's not just rich people buying up the land.
Right. Well, and speaking of wheat, can you talk a little bit about the invasion of Ukraine and what impact that's maybe having here?
So I can talk a little bit about that. The first thing I want to say about that is I wouldn't expect that to have had a big increase on the results I just shared with the audience today, and that's because of the period that the survey covers and when we actually conducted the survey. So think of it this way: the invasion of Ukraine happened in late March. We asked about in the survey we asked about what happened in January through March. And then we conducted the survey in April. So we know that, of course, the war in Europe has had really disastrous effects on a number of areas of the supply chain, including, by the way, input costs. And I'll talk a little bit more about that in a minute. But Ukraine and Russia are both two of the world's largest wheat producers. And so we've seen the spot and futures prices for wheat have really skyrocketed since the invasion took place. But for the period we were covering in this survey, just looking backward at the first 3 months of the year. Now, maybe you can think of that being baked in a little bit to the results that we got for the second quarter, because at the time we conducted the survey in April, these developments were well underway, and we did get one or two comments mentioning that. So respondents were aware of that at the time, but it's really not reflecting the kind of backward looking results that we got. And then, the other thing that I'll point out, some of these concerns that we're hearing about the outlook for or the sustainability of incomes, given the rising input costs, are probably due to those developments as well. Because again, that part of the world is a major producer in the fertilizer market. Fertilizer has not only gotten more expensive, we are starting to get reports of it being harder to find as well. Although most of the comments that we got indicated that while it's gotten more expensive, you can still get it. So it's kind of having an impact on both sides. I should mention, by the way, other commodity prices are up as well. It's not just wheat. Those are the sort of thoughts I have on that. It's very much up in the air, and it's anyone's guess exactly how that's going to play out. But I wouldn't read too much into the first quarter results as being an indicator of that.
Thank you. That is all the time that we will have for questions today. So thank you all for joining us. And we look forward to you joining us at our next Regional Economic Conditions webinar. We don't actually have one scheduled yet, but we'll be looking forward to that. We'll communicate with you via email for our next webinar. We'll also send you a link to the slides from today's presentation and the video link and some additional survey results that we published on our website. We look forward to seeing you then. Thanks so much.
Thank you.